Yes, welcome back to our channel. This is Webs 27FX. So for today, we shall be looking about market structures. Market structures, they are mainly divided into three market structures. We shall start with an uptrend market structure. In an uptrend market structure, here the market is forming a series of higher highs and higher lows, higher high and a higher low, higher high and a higher low. So when an higher high is broken, it forms a break of market structure. A break of market structure is formed after an higher high is broken. This is what I mean when this higher high is broken, it forms this breakout structure. This is the higher high which broke this previous higher high, thus forming a break of market structure. In this market structure, buyers are high. Buyers are in control of the market. What we mean in this market structure, we are likely to look for more buys than looking for sells. So higher highs are formed with higher lows. On the second market structure which we have the downtrend market structure. Downtrend market structure is characterized by a series of lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Here, the market is moving in a downtrend. It is sloping downwards, meaning sellers are more powerful in the market than the buyers. So here your main emphasis would be looking for sales than looking for buys. Breaks of market structure are formed below the lower highs. Yet in an uptrend market structure, breaks of market structures are formed above the higher lows. Thus, thus is the downtrend market structure. In downtrend market structure, as we have said, the market goes on forming lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, forming breaks of market structure. With time, we shall be looking on how to identify a valid break of market structure. But now this is the trend, the downtrend movement of the market. When we continue to another trend of the market, we have the ranging market structure. In the ranging market structure, here the market has no decision where to move. The market is just consolidating, moving in a consolidation way. This market structure, I wouldn't advise a beginner trader to go for it because and now you have no skills about how to trade this consolidating or ranging market structure. This ranging market structure forms when all the factors of the economy are equal. Here, buyers aren't very strong and aren't very low, and same as with the sellers. So the market is just ranging. It's moving in a consolidation way. With time, we shall look at the chart and we identify these market structures. So the combination of a downtrend and an and an uptrend market structure, it forms a change of character. As we see in this market structure shift, we have a formation of change of character. Here the market goes on forming higher highs and higher lows, higher highs, higher lows. As we said, when an higher high is broken, it forms a break of market structure to the upside. So when this uptrend momentum is done, when this uptrend momentum is done, the market forms the market forms a change of character. Here, a change of character is formed when a valid higher low in an uptrend is broken by a lower low, thus forming a shift in market structure. Here, buyers are more within the market. Here, buyers are in control of the market. But when the higher low is broken, sellers it sellers come in into the market. Here we see the sellers coming in into the market, but this doesn't guarantee you that sellers are fully within the market. We have to look for confirmations to see if the sellers have entered into the market and their validity in the market. So when a higher low is broken, it forms a change of character, most of which is known as market shift. So continue to go through that as we proceed. So so with time we shall identify how to get into sales into this market and how to take buys within this market. So this is the downtrend, as this is an uptrend. That combination of a downtrend and an uptrend, it forms a change of character, which is a confirmation that we are seeing in new traders in the market. On this market structure, we are seeing in sellers in the market. So here the market is from an uptrend to a downtrend. It's from the buying momentum to a selling momentum. But we shall be looking on that when the market is from a selling momentum to a buying momentum. Let's continue to our diagram and see. So here, this is where the market is from a selling momentum to a buying momentum. Here, the market goes on forming a series of lower lows and lower highs, as we said before, in a downtrend, lower lows and lower highs, thus forming break of market structures. We are going to look at how to identify a valid break of market structure forms lower lows and lower highs. At the tip end, it forms a lower low. When a previous lower high is broken, the market forms a change of character. This change of character just signifies us that the market is changing trend. It is changing from a downtrend, it's changing from a downtrend to, let me rename it, from a downtrend to uptrend. changing from downtrend to uptrend, and that's forming an uptrend. So we shall go at our chart and we identify these structures on the chart. Let's go to the chart. So we shall be starting with an uptrend market structure as we had seen in the video before. In an uptrend market structure, here as we said, the market is forming a series of higher highs and higher lows, 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 higher high and higher lows. So in this uptrend market structure, the breakout market structures are formed above the higher lows, which isn't so with the downtrend market structure. So as per now, that's how our market structure for uptrend look like. Here we are more of looking for buying opportunities compared to selling opportunities because we are seeing the market is moving in an uptrend where we say like here buyers are more stronger than the sellers as we see. Let's continue to the ranging market structure. The ranging market structure here there is no clear direction which the market will take. The market is just consolidating. It will be very difficult for a beginner trader to take a trade in this ranging market structure because as we have seen, there is no clear direction. Like you predict here, the market will take this direction or take this direction. So it will be advisable you trade what you see and what you can interpret. So here we are saying the market is moving in a ranging direction. There is no clear way to see, or I can take in my buys or my sells. All the buyers and sellers are strong. So I would advise a person, if you have no experience in it, you go on and trade the structure which is more clear to you. Let's continue to the downtrend. On a downtrend market structure, here the market, as we said before, it forms a series of lower lows and lower highs. Now the market goes on forming a series of lower lows and lower highs. So here we have to know like where and when we set up our sales position. Because in this market structure, sellers are more powerful than the buyers. So the most chances it will be we shall look for selling opportunities than looking for buying opportunities. It will be better for us to trade towards the trend but not against the trend. So here we are seeing the market forming lower lows and the market is forming lower lows and lower highs, lower lows and lower highs. So that's all about market structure. Please don't forget to subscribe to our channel and put your comment in the description for better service. Thanks. I remain Web 27 FX.